Welcome back. Some big names you know coming to market on the New York Stock Exchange this year, including Fitbit, GoDaddy, Square, Ferrari. In 59 IPOs this year, the company's raised more than $19 billion in total proceeds. Joining me right now is NYSE Group President Tom Farley. And Tom, it's great to have you on the program.
Thanks for having me back.
How was 2015? Characterize the year for us.
It was great. It was fun. The four companies you just mentioned were all really fun IPOs. It was nice to meet the management teams. Three of those four, I note, are trading 40% or up in the aftermarket. So we didn't just have a good time, but
people made some real money.
Yeah, they're also really good companies.
And you love to see that, because I feel like the first half of the year was fantastic in terms of IPOs. Something happened in the middle of the year, toward the end of the year, that turned things, and all of a sudden we saw a little bit of a freeze. What happened?
Yeah, we were proud in that we led the world in capital raising, and like I said, we had a lot of great companies come through. The first half of the year, really through August, was busy. It was hectic. We had as many IPOs as we did in a typical year, even a big year. Going back to 2013, we were slightly ahead of pace from that year, which was at that point a record year. But then in the latter half of the year, IPOs really, the spigot just turned off. And the reasons for that are several, but the volatility in the market was significant. And typically with greater volatility, you see fewer IPOs. But also in general, there's just a lot of uncertainty about the Fed, a lot of uncertainty about the federal government would it continue to function. And so the fourth quarter included the fewest number of IPOs of any fourth quarter in the last decade, other than the height of the financial crisis in 2008.
Because there was so much uncertainty about what was going to happen with capital markets, because we didn't know what was going on with the Fed. You saw some layoffs in capital markets businesses from the banks. What does the Fed rate increase yesterday mean for the next 6 months?
I think it's very good. I'll tell you why I say that. When I talk to leaders of companies about, hey, what would you like to see in the economy that would help us all? They all say certainty. Just give us some more clarity. And it's not just about the Fed announcement. It's about oil exports, and it's about, like I said, will the government continue to function? When I look at the announcement yesterday, there was a good deal of certainty. There was a little bit of surprise, a little bit more hawkish than was expected, but at least the leaders and investors who are making capital allocation decisions woke up this morning and said, I have a much better idea what the economy is going to look like over the next 6 months.
Normally when we talk, I ask you about volume, and I want to ask you about volume again in terms of what you're expecting, but Intercontinental Exchange and the New York Stock Exchange is as much about volume as it is now about data. So let me ask you about that, because ICE acquired, the parent company of NYSE, acquiring IDC, and now analysts are saying they're expecting non-trading businesses to account for 60% of revenue, with the majority attributable to market data, 40%. So you've got a lot of market data. What is that going to do for you?
We're the beneficiary of big data trends. So everybody's able to process such large amounts of data now. And if you're not processing that data, you're losing. You're not able to make as informed decisions. And so our investments in data are really a recognition of that trend. Data is becoming more valuable, and it's a big part of what we do already. I mean, we already provide data for our equities businesses, for our futures businesses, for our credit businesses, and so now adding fixed income from IDC is something that our customers were clamoring for.
Yeah, that's really great. It's a good story. It's attributable, though the data part of the story, I guess, is lower margins than volume and what you would see in the other part of the business. So it certainly is filling a hole in terms of giving you more information and help for your clients, but at the same time, the mix shift seems to be changing a bit at ICE.
It is, and the mix shift is changing. Data businesses are very valued by investors because they're predictable. They're subscription-like businesses. They're predictable. You can project them out with a high degree of certainty. And the growth profile is actually pretty attractive, and as is the margin profile.
Tell me what drives New York Stock Exchange volume in 2016. What do you look at? Because toward the end of the year, that was another issue. Volume really slowed down, right?
No, actually, volume's been fine.
It has.
Yeah, volume, and what you get typically, it's almost axiomatic, is as volatility increases, so too does volume, but IPOs go down. So we're hedged a little bit in the sense that volatility goes down, IPOs will go up, and the inverse is also true. So no, volume has been terrific. We've had a great year. I actually, when you ask about 2016, I'm not sure what to expect, because historically in a rate tightening environment, you have heightened volatility, you have heightened trading, but we've already seen that even in advance of the rate tightening environment. So this time it could be different, and it's very difficult for us to forecast exactly what volumes will look like next year.
That's a good point. All right, what about regulation? That's obviously one of the main issues that investors are looking at. What are the big regulatory changes that would affect the business in the next year?
Well, if I rise up to the parent level, ICE Inc., we're dealing with new regulation all around the world. There was Dodd-Frank here in the U.S. It was followed by EMIR and Dodd-Frank-like regulation all throughout the world. But when I come back to my day job running the New York Stock Exchange, our focus is on simplifying the equities markets. And so when I'm up speaking with Chair White or the commissioners or SEC staff and we're talking about regulation, we're talking about what can we do to simplify the equity markets, because they're just too confusing in this country. It's too complex. There's too much fragmentation. And I think there's a number of regulations that are in the works, whether it's the tick pilot, I won't go into too much of a degree of nuance, but the tick pilot, more transparency with respect to how exchanges and ATSs and dark pools report their trades. All of those, I think, could be very beneficial to the end user of our market.
And asset managers as well. There's some rules on the table for asset managers coming out of the Department of Labor.
Exactly.
I know that. So you're expecting a good year in 2016?
I am expecting a good year, in part because we had 20 IPOs, including many large IPOs, the largest IPOs that were planned for the year, that pushed because of the volatility. So coming into next year, when I look at our pipeline, it's healthier than at any point over the last several years. So signs are good, but I don't want to make any predictions.
Great stuff. Tom, good to have you on the program today.
Thanks for having me.
Tom Farley is president of NYSE. Next hour,